Tesla stock is rallying over 3% today on some analyst downgrades, some bad delivery numbers out of China, and some other questionable news. Tesla stock is actually rallying today on bad news. That, I think, is a good sign for what's to come for Tesla. Ladies and gentlemen, at any moment, we are going to get a readout of the progress or lack of progress made between the US and China in London. The meeting has officially ended, and we are just waiting on that confirmation. Now, I think we are going to get progress, and I think the markets will like this, and that is the first step of the next three big catalysts that I outlined in the last video. Number one, China-US progress towards a trade deal. Number two, tomorrow you have CPI. And then on Thursday, you have the robotaxi launch. These three catalysts I expect will be positive for Tesla and end this week on a very strong note. Okay, Tesla stock could be well in excess of $350 per share by Friday, potentially as high as $400, depending on the news that we get. And literally at any moment now, we are going to get that news from the US-China meetings in London. Ladies and gentlemen, welcome back to the channel. We have a lot to get into here in this video, so let's not waste your time. Let's get into it. So let's start with some of your Tesla stock news today. Tesla has introduced a 1.99% APR financing rate for the new Model Y rear-wheel drive in the US. You must take delivery by June 30th with a minimum down payment of 15%, and this applies to loan terms up to 72 months. Last week, Tesla only insured 8,600 new Teslas in China last week. That is down 34% week over week. And for the year-to-date total, you're at 217,380. Okay, last year during this week, you were at 236,087. So you are down like what, 18,000 or so from on a year-to-date basis. Now, Sawyer Merritt says the 3-day Dragon Boat Festival holiday took place between May 31st to June 2nd. Approximately 653.7 million people in China traveled within the country during those 3 days. So that could have impacted the registration numbers to a degree, but there were likely other factors too. And you can see that all brands, Xiaomi, the one that created the SU7, the one that was seen as the Tesla killer by a lot of bears, their deliveries were down 44% week over week. NIO was down 20.4%, Zeekr down 22%, Li Auto down 31%, XPeng down 42.5%, and again, Tesla at 33.8%. So it was really just a rough week for autos in general over in China, but that is kind of different. Again, usually when you have really bad headlines, markets don't care about the context. They just sell the stock. That's not happening this time. And Tesla is a clear outperformer today. Again, up over 3%, currently at $318.68 per share. And I think it's because people are getting ready for that robotaxi event. People are getting ready for positive developments via US-China trade talks, and what I believe will be a good CPI report tomorrow morning. All of these three catalysts, I believe, should boost markets and especially boost Tesla. Now, this is pretty phenomenal news. Tesla retail investors poured $651 million into the daily Tesla Bull 2X shares last week, the leveraged ETF, marking the largest weekly inflow since the fund's 2022 debut. Quote, the buying spree into TSLA, TSLL as the ticker, which is designed to deliver twice Tesla's daily return, reflects a now familiar reflex, doubling down on Musk during sell-offs, a strategy that's worked spectacularly in the past. Look at this. This was net negative really throughout all of 2025 until last week. and the thing just exploded, which is kind of funny because some people think the whole Trump-Musk feud was choreographed, that it was just something that they agreed to do for one reason or another. Again, that's not me saying this. That is what Morgan Stanley said. Morgan Stanley says that Musk's public clash with Trump was likely calculated. It says Morgan Stanley suggests Elon Musk's public clash with President Trump is a calculated strategy to draw attention to U.S. fiscal issues, a top priority for Musk. Despite potential negative sentiment towards Tesla's brand, the firm believes that this was anticipated by management. Musk's political involvement is separable from his role at Tesla, and investors may underestimate his willingness to face criticism. Continued discord could increase Tesla stock volatility, but Morgan Stanley remains confident in Tesla's long-term vision, reiterating an overweight rating and a $410 price target. They highlight Tesla's strengths in AI, robotics, energy storage, and infrastructure as unmatched growth opportunities beyond traditional EVs. And again, Wells Fargo says that Tesla shares will drop 60% with sales trending, quote, meaningfully weaker. These guys, you just got to give it up for them. You know, they go to college, they, you know, get scholarships. They seem like they're like smart individuals, and then they say shit like that. And it's like, how do you manage people's money? How? This is the most idiotic take I've seen on Tesla in a long time. And I don't know how people like this are honestly employed in financial markets. Like, you should be working at McDonald's or something, because this, you're going to lose all of your clients' money if that's how you're betting or investing on stocks. Wells Fargo predicts a 61% drop in Tesla stock price to $120. Citing a weakening core automotive business. Come on, bro, dude. Oh my gosh. If you didn't know how idiotic this sounds, you know, you would look at this and say, "Oh my gosh, that sounds terrible." But we all know this is an idiotic point of view. The automotive business is going to be a lot less of a focus over the next 6, 12, 18 months. To some degree, the car business could grow stagnant, really not grow at all anymore, and Tesla would be fine. If robotaxi really scales, and if Elon's projections of delivering Optimus robots in small numbers next year is accurate, okay? Especially as inflation comes down, interest rates come down, we can start to extend out our time horizons, okay, for investing capital. Because the higher treasury yields are, or the risk-free return, typically the lower valuation you put on stock. So it's actually incredible that Tesla has done so bad recently, and the stock is where it is today. It's honestly quite impressive, considering you get paid 4.5% every year for 10 years in a 10-year treasury bond, okay? Nonetheless, this is not new information. Analyst Colin Langan notes a 23% year-over-year decline in May global deliveries and ongoing pricing pressures from aggressive financing promotions, risking Q2 margins. Despite Tesla's upcoming robotaxi launch on June 12th, Langan believes it won't offset poor fundamentals. Tesla faces slowing sales, increasing competition in China, and potential supply chain issues from Trump's tariffs. The stock has fallen over 22% in 2025, worsened by recent tensions between Elon Musk and Donald Trump, though their public dispute has recently eased. Yeah, this guy has average return of negative 6.5%, success rate of 46%, and is literally in the top or bottom, 5%, 3% of analysts out of 5 stars. You can barely even see it. Let me show you this. I mean, it's honestly disgraceful that you're able to cover Tesla with that. Bro, that is 5, that's out of 5 stars. You have a corner of one, not even a full corner of 1 star. That's bad, okay? Like you were about to lose your job and you want to come out and make those kind of claims? I don't know. I don't mean to get defensive, but like, let's be honest. Some people see stuff like this and just totally like believe it, right? I'm gonna actually leave this here because wow, that's impressive. That's about as bad as it gets. In option activity today for Tesla stock from hedge funds and institutions, you have 83 different option trades totaling $105.4 million with a positive order value of 22%. I like this because it looks at the large trades. Okay, so hedge funds and institutions tend to do those large trades like hundreds of thousands of dollars, millions of dollars per trade. A lot of that's not retail investors. So hedge funds, institutions seem to be pretty negative today on Tesla. But look at the volume makeup today. 62.29% calls, 37.71% puts for this Friday's expiration. For the following week, for June 20th, volume 64.31% calls and 35.69% puts. It seems like as an aggregate, again, including retail investors, people are actually pretty bullish on Tesla for this week and for next week. Again, what are short sellers doing, which tends to be an activity that is mainly done by Wall Street? You have 806,000 shares today that are being sold short. Yesterday, you had roughly the same amount that was actually covered. So the last 24 hours, kind of like a net zero, I would say, on the stock. But you do have 3.04% short interest, which is the highest you've been at in the last couple of months at least. $26.26 billion sold short in Tesla stock, totaling 85.11 million shares sold short. Tesla is a ticking time bomb for the shorts. And I think over the next 3 days, you're going to see some big upside pressure on Tesla stock, and short sellers are going to be under a lot of pressure to cover those short positions. I think if you break out past your 370 level, the rough high that you were at on May 29th, that's where the pressure really starts to get put on. In the news today, we did get some good news from India. It says here, India and the US advanced towards an interim trade deal after 4-day talks. India and the US aim to sign the first tranche of the trade pact by fall of 2025. I mean, that's still quite a ways away. Again, the big catalyst coming for markets is coming at any moment when we get headlines of the outcome or results from US-China talks in London. I think we're going to get some positive developments, specifically in regards to rare earths and semiconductors. Here's the deal. There's going to be a trade-off between China giving us rare earths, which we want, and China getting semiconductors, in which they want. I think it's going to be a trade-off, and I think, obviously, that's going to be big news for markets. Like, NVIDIA able to sell in the Chinese market again? Yeah, that could probably send markets to new all-time highs, and probably one reason why AI stocks have been on a bit of a run recently. CNBC reporter on X says 2 government officials tell me US-China trade talks are still ongoing in London, despite some reports in the last few minutes saying otherwise. Talks are likely to wrap up, quote, soon, but not yet, one said. Trump told Fox News that Iran is becoming much more aggressive in nuclear talks. That is what did cause markets to get a bit of a flush lower, and then we ultimately recovered it. There is $698 billion worth of homes for sale in the United States, which is a record since Redfin began tracking data in 2012. This is not really important for markets, but wow, that seems like a crazy number to me. U.S. Senator Graham says no tax on tips or overtime may not fit in the big bill. And Graham says the Republicans may need many bills to meet Trump's aims, and that he is also prepping a backup GOP tax and spending bill. And apparently today, India and the US held talks on market access and digital trade, with discussions that are progressing well. And again, the second day of US China trade talks have begun. They are going well per Lutnick. And literally at any moment, you're going to get some news coming out via these talks. Probably after the bell. It seems like Trump recently likes to, give news after the bell. So I wouldn't be surprised if you have to wait until after 4 p.m. Eastern Standard Time, obviously. But look at the S&P. It wants to break higher. And you're less than now 2% away from prior highs. That's when Wall Street is going to start getting bullish on markets again. When you actually break new all-time highs, you're only about 1.5% away, roughly, from new all-time highs. If you can get above those highs that you were at on February 19th, that's when people are going to all of a sudden jump into stocks again. Because why? As I've talked about on this channel a couple of times before, once you hit a new all-time high, you tend to hit more new all-time highs. You don't tend to just shoot up, hit a high, and then shoot back down again. You tend to go up, hit a high, go up, hit a new high again, then you consolidate a bit, that's pretty typical, and then you go higher again, right? New highs tend to precede new all-time highs. And if a rally is going to fail, it's going to fail right before you get to a new all-time high. So right in this kind of range we've been in, but it hasn't failed so far. The NFIB Business Optimism Index today came in at 98.8. The estimate was 95.9. So you came in about 3 points better than expected on this survey, which is good news. But that was it for your economic data. Tomorrow, you get your CPI numbers. Now, core month over month is expected at 0.3%. Last month was 0.2%. So you are expecting an uptick in core inflation. I don't think we're going to see that. I don't see inflation out there. If anything, I see more deflationary pressures. Now, core year over year is expected again to rise as well from 2.8% last month to 2.9%. Same situation. I don't see the pressure on inflation. I don't see inflation. I don't think any of us really see prices going up right now. Like that to me doesn't make a whole lot of sense. Now, headline inflation month over month for May expected at 0.2%, unchanged from last month, and year over year headline is expected to rise from 2.3% to 2.5%. So heading into tomorrow, one of the reasons I'm bullish on the CPI report is because Wall Street's expecting inflation to show up tomorrow. They're expecting that tariffs are going to show up in this inflation report tomorrow. If they don't, then Wall Street may have to reconsider much of their bear thesis, right? Because the bears right now are like, oh, the economy is going to weaken, inflation is going to be high, the Fed's not going to be able to cut rates and accommodate things. Well, if you don't see inflation tomorrow in these CPI numbers, Wall Street might say, the next report's going to have inflation. But the next report isn't going to be for another month. So what does that mean in the meantime? That means your bear thesis is kind of put to rest. Mix that with perhaps some good news from US-China trade talks, and you're definitely looking at a market that's primed for new all-time highs and probably a couple percentage rally even above that. Now, tomorrow you also have at 1 p.m. a 10-year bond auction, and those have been pretty important in recent times. The percent of stocks trading above their 50-day moving average coming in at 78.42%, which is on the high side, definitely on the high side of the last 5 years. This really isn't a good metric to look at when markets are heavily correlated. Right? Markets have been heavily correlated recently. So this is the percent of stocks above their 50-day moving average. This is not telling you that, you have to go lower, right? Even though you're way up here and stocks tend to, get up here and peak out. It's just telling you there's a lot of correlation. Stocks have been doing well together and stocks have been doing poorly together on bad days. for the most part. Now, the CNN Fear and Greed Index is pretty stuck here at about the midpoint of greed, coming in today at 64. That is up 2 points from yesterday. Yesterday's number of 62. Market momentum is fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, greed. Market volatility is neutral. Safe haven demand in greed. Junk bond demand currently in greed as well. Now, coming out on Thursday, you will get a new AI investor sentiment survey. Again, we talk about this almost every day. There's more bears right now than bulls. Until this flips, so there's like 10, 15, 20% more bulls than bears, it's hard to not be bullish on this market, right? Because, I mean, if everyone's still bearish, that means stocks have a wall of worry to climb. Stocks only go higher when people are bearish, okay? When there's some bears out there. If everyone's bullish, that's precisely when stocks peak out and start to come down, because it's about expectations, right? If everyone's super bullish and we get good news, great, we expected it, okay? How much upside do you get from that? Now, if everyone's bearish and we get good news, then nobody expected it. Nobody, right? Some people obviously do, but nobody. And then it's like, wow, that was much better than everyone thought. Buy stocks. That's why you hear that saying that stocks need a wall of worry to climb, right? You have to have bears out there. And the more bears you have, typically, the more bullish you should be as a contrarian indicator. So that is still waving the green flag, telling you to be bullish on this market. And that's exactly how I'm positioned. I'm positioned for some pretty aggressive upside over the next 6 months. If I'm wrong on that, I'm going to get clapped. If I'm right on that, I'm going to do exceptionally well. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.